Guys. Happy Tuesday. I hope you guys had a very good day on our charts today. I want to talk a little bit about rollovers. Had a one-on-one session today, and we got to talking about how she was using rollovers consistently to keep her trades going, even though they were losing trades. Now, before we even get into that, what is a rollover and exactly how does that help you in whatever option position that you may be in? The first thing, plain and simple, when you roll over a option, you're just basically looking to extend your expiration date. Okay, plain and simple. So if I have an option that expires this Friday, I'm able to roll it over into another position that expires, let's say, next Friday or the Friday after. Or if I want to go a couple of months, couple of weeks out, you're just simply extending your current expiration date on your option trade position that you currently have open. The second thing, these rollovers are extremely useful. They can be useful, but you don't want to just be using them all willy-nilly because you feel like my trades are losing. I don't want it to expire. I feel like it can do this, or I'm hoping that it'll go up a little bit later, so I'm going to roll it over. The biggest thing that we had a conversation about was her continuously rolling over the same trade back to back to back, a week out, knowing that it was a loser because she did not want to close it because she was scared if she closed it, it was going to go the exact direction that she was hoping. So she continued to hold a losing trade, which she should have just cut her losses instead of wasting more money. The next thing is this misconception around rollovers, okay? One of the things she did mention was she thought that she was able to pick a different direction. She was in one direction. She thought, hey, if I'm in puts, it's going against me, it's going up. Maybe I can roll it over to a future expiration, a different strike, at a different direction in terms of going from puts to calls or calls to puts. You cannot do that when you're rolling over. The only thing that you're able to change and extend is your expiration date and the strike price. So you can go from, if you have a $15 strike and you say, well, now I want to pick up $18 strike. You're able to do that. Or you want to pick something lower. You can pick a different strike and a different expiry, but you cannot change the leg that you're playing. If you're in puts, you can only pick put option. Another misconception that she talked about, and I have seen this before, where people did not know that you have to pay to roll over. Why on earth would they allow free rollover? If that was the case, rollovers would be done, I mean, extensively. Of course, it's going to cost, but this is how it works. If you are in a trade, let's just say the current value is $50, whether it's up, it's down, whether just whatever the current value is. When you roll over, let's say hypothetically the new strike price that you pick, let's just say is $150. The new strike and the new expiration date will cost you $150 on a premium. Whatever the current value of your current option position open will be deducted from the new premium. So if your current value is $50 and the new cost is going to be $150, you will be credited that $50 from the current one, and it will be applied to your new premium, and you will only pay $100. So the current position will be closed out. You will be credited that value towards the new premium cost. They'll deduct that, and you pay the remaining balance to open up your new trade. It is not free. Now, the last part is rolling over a good idea, and when is it a great time to actually do it? Now, yes, I do think it's extremely beneficial. I've done it from time to time, and I'm pretty sure I'm going to do it again in the future. When I decide that I want to roll over something, let's just put it like this, okay? This was the best way that I could explain to her. Let's say some news come out, or potential news, or let's say earnings are coming up, and you say, okay, I know that this company is going to do really well on earnings, or this particular news that has come out, I know that it's going to drive the stock or whatever the case may be. And you say, I want to take advantage of that. But this announcement takes place in 3 weeks, but my current position expires in 1 week. That means that I would need to roll it over at least 2 to 3 weeks to be able to take advantage of earnings, take advantage of this delivery report, this partnership announcement, this acquisition, whatever it is. I would want to roll this thing over past that potential date of this upcoming event so that I can take advantage of a rally or a downside move, depending on which way I'm playing. Okay, so I look at that and I have sheer confidence that me rolling it over will allow me a good advantage, then I will do it. Now, when is it not a good time? When you are telling yourself, I think that this thing can go back up. I'm hoping it can go in my direction. So I'm going to keep rolling it over. You are just lying to yourself to where you know that you have a loser on your hands and you don't want to accept it. So you keep rolling this thing over instead of just using your core risk management, and that is cutting your losses. Cut your losses and look for opportunity elsewhere. If this thing is a continued loser, especially after your second and third rollover, it's probably time to cut your losses. Now, I also highly recommend not rolling over the following week. Okay, so if I have something that expires this for upcoming Friday, right? And I say I want to roll it over, I'm not going to continue to roll over to the next Friday. If I'm going to go into rolling over on my trade, I am going to give myself more cushion to actually let this thing run if I have some confidence in the reason why I'm rolling over this thing. I'm not going to keep going back to back and just doing a week, a week, a week. I'm wasting money, especially when the trade is already losing. I'm just putting more money into the market, giving more money to the market when I should be cutting that trade and just cutting my losses and looking for opportunity elsewhere. Okay. So if you're going to roll over, at least roll over into something that allows you more room to actually let it do whatever it is that you're hoping it's going to do. Make sure you have a core reason for why you're rolling it over, and you're not just doing it because you are afraid to let go of something that you know you need to drop. Okay. And also, when you do roll something over, I also recommend having at least multiple contracts. That way, if you are saying, I'm going to roll this thing over about 3 weeks so I can take advantage of earnings in 2 weeks, at least have multiple contracts so you can sell off something. That way, you can take some profit. And just in case earnings don't send things the way you want it, at least you secured some profit. And the runner is what you're risking in this rollover to take advantage of what earnings may or may not do. I really hope that this helped. Rolling over is not available on every platform, but a chunk of them there are. I know Webull, Robinhood. Let's see. I think Charles Schwab have it. I know someone asked about SoFi having rollover sometime, but SoFi does not allow rollover. It's kind of limited over there. So you can see if your platform allows you to roll over positions into new exploration and new strike prices in those settings somewhere, or go to any of your open positions that you may have on whatever platform you're using and look for the option to roll over that position, and you'll be able to get some first hands-on on what that looks like and exactly what we can do with that feature. All right. So I hope this helps.